Shares of Netflix are on track for their biggest fall in more than a decade.
That's right. The streaming giant's stock price plummeted after the company reported it lost subscribers for the first time in more than 10 years. The price of Netflix shares have fallen around 35% since markets opened today. The drop could set the company up for its biggest fall in over a decade.
Investors expected Netflix to add new users in the first 3 months of the year. Instead, the streaming service lost 200,000 subscribers. Netflix also expects to lose more than 2 million global subscribers this quarter. CBS News tech reporter Dan Patterson joins us now for more on this. Dan, what is going on?
Well, there's kind of this perfect storm of intersecting reasons. I mean, look, the war in Ukraine has actually taken a toll because Netflix pulled out of Russia. But the big issue here is password sharing. The company has just cracked down on password sharing, which means that it has likely lost subscribers in the process. And they also think that, look, market saturation, there's just a ton of competition out there in terms of streaming services. All three of these factors have led to a pretty big decline in subscribers.
Yeah, because while they're cracking down on password sharing, they're also raising the costs of subscriptions, right? So I feel like they've, even I watch my Netflix. I liked Bridgerton. I'm watching Anatomy of a Scandal right now. Even I paused at the latest, price increase. So is advertising a potential part of the solution here for them? Because we know Netflix has shied away from that.
It is now, but CEO Reed Hastings has always kind of shied away, like you said, from advertising. In fact, he said that it is confusing, and having these lower tiers like some of their competition does just creates a cluttered and confusing experience. He likes one Netflix, but we know that advertising not only could create this lower cost tier, which could increase subscribers, it also could bring in revenue on its own.
What do you anticipate the effect could be on the bread and butter for Netflix, which has been this sort of original content that everyone has grown to appreciate so much, with so many other network streaming services producing their own series, and then with this news? Could that change for Netflix?
Well, that is the billion-dollar question. As we know, Netflix was a real innovator when it comes to original programming. If you recall, almost a decade ago, the company launched House of Cards. This show was really innovative because it was one of the first original television-like programs to debut on a streaming service. What this really helped Netflix do is pivot away from those DVD rentals and establish itself not just as a broadcaster or as a syndicator of original content, but a creator and owner of original content. So now that they are creating these shows, they're also feeling the cost of creation. So,
Dan, we do know that, when Netflix started, it didn't have a lot of competition in the space. There's a lot of competition now. So how is Netflix differentiating itself from other streaming service providers? Yeah, that's right, Tanya. I mean, there is just a ton of different options out there. And we should say, of course, Paramount Plus is one of those options. But Netflix is not just leaning into content creation, but they're kind of saying, hey, look, we were the original and we were the premium option before all of these other players got to the market. They might have to offer a little bit more than that. All right. Dan Patterson, thank you so much for joining us. We appreciate it. It's good to see you.